Hello there. My name is Jack Sparrow. Welcome to another episode of the Forex Show. In this episode of the Forex Show, I want to teach you about price action and how to use price action to trade the Forex market, as well as other areas of trading. I have my usual Q&A session at the end of this video, as well as other things throughout this episode. You're most welcome here. Thank you for being here. Please leave a comment below. All support is appreciated. It is summer here in the UK. It's getting hot. I'm in the office. I'm sweating. Hay fever has started. I do love the summer, but I don't like the hay fever aspect. If you see me grabbing some tissues or my eyes are red, it's the hay fever. It's been a long time since I did an episode of the Forex Show. I'm excited to upload this to YouTube. You've probably noticed that I'm on a bit of a roll at the moment. I'm uploading videos every week. I'm creating videos. I'm posting to Facebook, posting to YouTube. I may finally be in the habit of creating and uploading content. Hence why there is now another episode of the Forex Show. So let's jump right in. Price action. There is a lot I could teach you about price action, but I want to focus on the aspects of price action that I feel will benefit you the most. With price action, you can identify price direction, you can identify good entry points for trades and good exit points, and they're the foundation of any trading strategy, really. Which direction do I want to trade? Where do I want to enter? Where do I want to exit? There are other aspects of a trading strategy, like which time frame shall I use, which pairs am I going to trade, how much am I going to risk, etc., etc. But the real foundation of any technical based trading strategy is the direction, the entry, and the exit. And price action can be used for all three of those points. It is a part of technical analysis that I love and that I've been using for years. If you've been following my content, you know that I use both technical and fundamental analysis to trade Forex, and price action does play a major part in my analysis and the reasons why I take the trades that I do. This is Australian dollar, Canadian dollar, and let's go to the 4-hour time frame. This is the Trading View trading platform. It's a great piece of software. It's for free. The basic account is for free. I suggest you go and open a free account with TradingView. I have never used any charting software that's better. Okay, so what's the first thing I can teach you about price action? The first thing and the most important thing I would say when using price action for analysis or any part of your trading is looking at major swings. Look at swings. Look how price is forming swings. And by swings, I mean these sort of moves up and the moves down. Okay, so if I bring up an arrow, we have a move up, we have a move down, we have a move up, we have a move down. So price swings like this. Now, the most important thing about these swings is the size of them. Look at swings that are big. So a big move up and a big move down. Too many people get too distracted with these little swings. So if you see little things like this, we're not interested in them. Now, to prevent yourself looking at these little swings, zoom out. So if your charts look like this, you're far too zoomed in to the market and too zoomed into the price data, and you're just not going to be analyzing the market the way you should. Try zooming out. So zoom out. This is the sort of zoom default I use, and look for the big swings. Don't get distracted by these little swings. Now, the reason why we want to look at these swings, there's two, or at least two main reasons. Number one is direction, and I'll go into that in a bit more detail in a moment. Number two is support and resistance, because the support and resistance that these swings create is a lot more effective, a lot more reliable than the support and resistance that these little swings create. So if we're looking at, say, this resistance here, it was support here, but it was minor support because it was a minor resistance. Whereas if you look at a major resistance, it could act as major resistance or major support in future. We want to catch the big moves, not the small moves. And in order to catch the big moves, look at the major support and resistance. And once again, I'll go into that in a bit more detail as this video goes on. So point one is look at major swings, not minor swings. Point two is when we're using these swings for direction, look for swings that have unique chart space. And what I mean by that is unique chart space to the left of the chart. Okay, so if we look to this swing here, so price swung up and it swung back down. If we look to the left of this swing, we can't get very far before we actually hit other candles, before we hit another swing. Whereas if you look at swings with unique chart space, such as this swing here, it's got all this space to the left. There's no candles, there's no swings next to this one. Lots of space. That can give you a good indication of where future price may be, because price generally follows unique chart space. So you can see that price then swings higher, and once again we have unique chart space to the left. Whereas swings where there isn't unique chart space, such as this one that I went through here, and we can find some others like this one here, there is no unique chart space. We hit another swing pretty quickly to the left, generally mean nothing. Okay, so you want to look for swings that have unique chart space. You're much more likely to catch a trend if there is this unique chart space to the left. Okay, so we swing up, we come down, we swing up, unique chart space, a good sign that we could swing again. Unique chart space, a good sign that we could swing again. Look, there's not much unique chart space this time. Okay, so this swing here, there's not much, and you can see that price doesn't really swing much further. Same thing happens here. So look for unique chart space. Now, following on from that, if you have swings that are very similar in the sense of the highs and lows they create, so we look at the swings here. So big swing up, unique chart space, looking good. Big swing up, unique chart space, looking good. Swing up, not really any unique chart space, and you'll see that the swing high here is very similar to the swing high here. Now when you get this sort of thing happen, where you have swing highs, or if price is downtrending, swing lows, that are very similar in size and also where the highs are on the chart, that's always an alert system. It's always a signal that something could be happening. Okay, so we have a swing high here and swing high here. They're very similar. When I see that, you need to think of two things. Number one is patterns, a reversal pattern, such as a double top, which happens in this example. So a double top reversal pattern. The other thing that could happen is a consolidation. This could be the start of a range, that price could move sideways, and we see that over here. So we have similar highs here, similar highs here, price is ranging. Okay, so to summarize, swings with unique chart space to the left can signal that the trend is going to continue, that this is uptrending, price is uptrending. there isn't unique chart space, price is likely ranging, the swing could be meaningless if you're looking for a trend-based trade. When you have swings that are similar size or reach the same highs or same lows on a chart, look for a reversal pattern, double top, head and shoulder pattern, something like that, or price is going to consolidate, it's going to move sideways. Now, I've noticed that we're only focusing on uptrends here. So let's try and find some downtrend examples. So something over here. So if we were looking at the swings here, unique chart space, looking good. Unique chart space, looking good. We don't have unique chart space, not much of it anyway. And you can see that the lows, I've just noticed my camera may be blocking this. Let's move over. So you can see the lows are very similar. Okay, so look for a potential reversal pattern, a double bottom, or look for a consolidation. Price is going to start ranging or consolidating. Another thing with these major swings is once you start identifying major swings, you can generally draw very good support and resistance. And the support and resistance I want to focus on first is channels. Now, something that's not taught very often is price often moves in a channel. A horizontal channel, a bullish channel, a bearish channel. So if we were to look at the price action here and identify the top and bottoms of these swings, you can see that we have a very clear horizontal channel. Okay, if we were to perhaps look at the swings here, once again, we can just do the tops and bottoms. We have potentially a horizontal channel. It was also a double top pattern. If you connect swing lows together, then price can move in a bullish channel, and then we can adjust that over here. Now, this is not a video about how to draw channels. What I'm trying to teach you is, I would say 90% of the time, price is moving in some sort of channel. So if you can identify the channel, it can really help you identify the direction price is going, but also identify support and resistance areas that could provide trading opportunities. Now, I do have a trading strategy called Forex channels, and you'll see if I go to the daily, because these are all based on daily, you can see that 95% of the time price is moving within some sort of channel. You can see that here, either a big horizontal channel or small horizontal channel or some sort of bullish or bearish channel, and you can see that here. Once again, this video is not about drawing channels. I'm just trying to teach you that channels are generally always present. So I've been through a number of pairs now. The only one that didn't have a channel was Euro Swiss franc. So horizontal channels. A big horizontal channel with a bearish channel. There's always some sort of channel most of the time. So identify channels. It's a really good way to use price action to look for direction, entry, and exit. Now, I did create a list that's in front of me. I just want to make sure I'm covering everything. So look for major swings, unique chart space, channels. Something else I will now mention is when you're looking for direction and marking channels and looking at these swings, do so on the 4-hourly, daily, and weekly charts. Okay, so we go back to Australian dollar, Canadian dollar here, and I clear them off. If we look at the 4-hour, we can see there's a clear horizontal channel, like this. Price is ranging. If we look at the daily, we might get a different sort of view, such as a big bullish channel, like this. Price is uptrending. So we're in a consolidation here on the 4 hour. That's just part of this daily bullish channel. And then on the weekly, we might get another view, such as prices moving in a sideways channel, another horizontal channel. So we have this bullish channel towards this weekly channel resistance, horizontal channel resistance. You don't need to do any more than that. That should be enough to give you the direction you need to start trading Australian dollar, Canadian dollar, and give you some potential entry and exit points. What you don't want to do is start analyzing direction and start analyzing the price action for direction on anything smaller. As soon as we go to the 1 hour time frame, things get very messy and very choppy. Same on the 30 minute, on the 15 minute. And the thing about these smaller time frames is unique chart space generally is not as reliable, and these major swings can give lots of false signals. So when you're analyzing the market in the sense of what's the direction, what's the support and resistance, look at time frames anything higher than the 4 hours, including the 4 hour. 4 hour, daily, weekly. That's what I use, sometimes the monthly, but not very often. Okay, sticking with major swings, they also provide areas of strong support and resistance. If we look at these major swings, there's major resistance here. Okay, I'm only looking at these big swings. That's not what I wanted. Just look at these big swings. So big swing, it's a big swing, big swing. Look at the big swings and mark an area of support and resistance. A big swing here. Okay, so based on this swing. So to help you identify this, big swing down, big swing up, big swing down. It's these big swings. Okay, so if I mark the support and resistance from these big swings, what we end up with is something like this. And this is all based on the daily. And we could do the same again on the weekly. So big swings here, which is the horizontal channel resistance. Big swing here, the horizontal channel support. Big swing down here. And I'm just marking a general area. It's normally based on the close of the candles and the wick. So just covering that area, really covering the area of the wick. So that's how things are looking. Now if we mark this major resistance here on the weekly, so look at the big move off that area, the big swing that price action has formed. Look at the potential trade we could have got in future. We could have traded this from here all the way down, and you can see we've had another big swing. Okay, so big swings, major swings is what you want to use for support and resistance, and the same thing happens again here. So big swing, mark that as support. We've had a big swing, and currently still forming this swing off the support area. Let's go back to the daily and look at these. So big swing, nothing here. It's not going to be 100% reliable. Big swing here. When price tests this area again, big swing again. Big swing, big swing. So look at these major swings. And once again, focus on support and resistance from the 4 hourly, the daily, and the weekly. From my own experience, layering as much as you can but keeping it simple is generally the most effective way to trade. So I combine this style of price action analysis with technical indicators, with fundamental analysis, and it gives me a great way to trade the markets. If this has been helpful, let me know below. If you have your own sort of ways to analyze price action, share below. Let's make this an educational experience for everybody. Now, something I haven't spoken about when it comes to price action is things like price action setups, Japanese candlesticks. And I do use Japanese candlesticks. What you need to realize with price action setups is generally they're the last thing, they're the trigger, they're the last signal you need to enter a trade. You don't see a pin bar or an engulfing candle or an inside bar or any other Japanese candlestick setup and then decide to trade based on that setup. Generally, you would do all your analysis first, decide where you're going to enter, look for the setup, then enter the trade. It's always the last thing to look for. So going back to this resistance level here, perhaps there's a setup such as this pin bar here or this pin bar here, or perhaps there are other setups in this area on the daily time frame that may help you get into a trade at this resistance level. Whereas pin bars and other candles, engulfing candles, if I can find one that's a bit random, such as this one here, if they don't appear at areas of interest, then don't take the trade. You don't take a trade based on a setup by itself. Okay. Price action. It is fantastic. There's a lot more I can teach you about price action, but let's leave it for now. And let me share with you a couple books that I read recently. Okay, I have two books that I read recently. Number one is Coming to My Trading Room. I've actually read this a few times now. This is probably my third time I've read it. Really good book. If you're looking for a good all-rounder trading book that will teach you about trading strategy, risk management, trading psychology, a good all-rounder, this is the book that you want. I highly recommend it. It's not specifically for Forex. The author trades stocks, but I would say everything in the book is applicable to Forex trading. Another book I read recently is The Ultimate Guide to Trading ETFs. It looks like this. I recently got into equity investing and also ETF investing, just trying to find ways to plonk money and let it grow, ways to save for the future, retirement, those sort of things. And that was a really good book to help me understand the basics of ETF investing and trading. It has some real key information that you should know before investing in ETFs. So go check that out. What am I watching at the moment? I'm actually looking to sell the dollar. That might sound a little contrarian, but I'm looking to sell the dollar against the Australian dollar and against the New Zealand dollar. If I bring up my analysis, okay, I think the dollar strength is over for now. I could be wrong. Things can change very quickly in the Forex markets. Everything is good for the dollar and has been good for a very long time. But as this good data continues to come out, the dollar is not going anywhere. There's so many reasons to be buying the dollar right now, but we're not moving. And if we look at, say, US dollar, Canadian dollar, let's go to the 4 hour, or maybe the daily is better. Price is just not going anywhere. We're very choppy, moving sideways. Euro US dollar will look the same if I bring that up. Euro US dollar not really going anywhere. Even though Europe is cutting rates and the US isn't, and economic data is poor for the euro and very good for the US, we're not moving anywhere. I think that the dollar strength is over. I think the market is waiting for some negative news for the US so it can start selling US dollars. I think we're just waiting in anticipation for a rate cut. So I am hoping and planning on some negative news hitting the US at some point soon. I think you'll then see some really big moves in dollar pairs, weakness in the dollar. Now you may think, well, you're kind of just gambling on these news releases, and in a way I am, but we have major news today for the US. Again, tomorrow there'll probably be more events next week. Whenever positive news comes out, the dollar isn't really moving anywhere. As mentioned, I think we're just waiting for negative news. So I'm not too concerned about going long before these events, because I can't really see the dollar strengthening that much against my short position. Obviously, if the news comes out and it is positive, then I'll just close the trade out and wait for the next trading opportunity. But Australian dollar, US dollar, what I'm looking for is a break of this weekly trend resistance. I think we're going to break above it and attempt a bullish move up. On the 4 hour, we're in this consolidation. I'm using major swings as covered in covered earlier in this video. I think we're going to see a break to the upside of this range. Possibly not. I'm not in the trade yet. It could be we break lower before moving higher. New Zealand dollar, US dollar. Where are you? You are here. It's potentially like a daily inverted head and shoulder pattern. Prices around moving averages. We could see a move off this area and a climb higher. Once again, nothing's certain, and I don't have any positions open yet. But saying that, I could have a position open or a couple positions when you watch this video. It's the 27th of June today. If I upload this video today, I probably don't have any positions. If I upload it next week, on Thursday, the 4th of July, I probably am long. And you'll probably see a video on my YouTube channel all about those long positions that I have open. I'm losing my trail of thought. Okay, why am I looking to sell the dollar against the New Zealand dollar and the Australian dollar? Well, inflation's still high, and there potentially is no rate cuts in the near future. I'm more keen on the Australian dollar trade than the New Zealand dollar because the economic data is a bit poor for New Zealand. So there could be a rate cut just to try and stimulate things. But, you know, why would I sell the dollar against the euro? I don't want to be buying euros right now with the rate cuts. The Bank of England is nearing a rate cut, potentially multiple rate cuts. Why would I buy the pound? So it's really the Australian dollar, New Zealand dollar that I am interested in. Time for the Q&A part of this episode. I have a few questions that have been asked me. If you have any questions you'd like me to answer in a future episode, use the comment section below and I'll read them and I will respond to them. First one, a bit of an odd question. How old am I? I am in my late 30s. I do look older than that, or I think I do anyway, probably because of my hairline. But I'm in my late 30s and I've been trading for almost 15 years. So I started trading in my early 20s. That doesn't mean that you have to be in your early 20s to make this a success. You can start learning to trade at any age. But yeah, to answer your question, I am in my late 30s. Tax on profits. Okay, so I've been asked about what tax do I pay and how do you pay tax? What tax are you liable for on Forex profits? It really depends on where you are in the world. So I'm here in the UK. Capital gains tax is generally the tax you would pay on things like stocks and shares, but Forex is a bit different in the sense that you can open things like spread betting accounts, which is tax-free. Gambling is tax-free unless you're seen as a professional gambler. Now what I suggest you do is speak to an accountant. I cannot advise you on YouTube how to pay your taxes and what taxes you'll be liable for, but speak to an accountant. But here in the UK there are tax-free options, and that's what I wanted to get across. So spread betting is a great way to keep your gains and not pay any tax. Do I trade economic data? I do, as mentioned earlier. I'm looking to sell the US dollar in anticipation for negative US news, but generally speaking I don't. Generally, the bin men are coming around, so you might hear the garbage truck outside. Generally I analyze economic data and then take trades based on that, rather than trade economic data directly. Okay, one more question, we'll draw things to a close. Do I trade indices and commodities? I do, but not very often. And when I do, I trade spread bets or CFDs. Thank you so much for watching, and I'll speak to you in another episode of the Forex Show.